We're going to go into a discussion now about the Department of Housing and Urban Development has announced a decrease in mortgage insurance premiums. Now, there are two different types of mortgage insurance. There is private mortgage insurance, which is PMI. That is on loans that are insured by Fannie Mae or Freddie Mac. So that's non-government insured loans, although really Fannie Mae and Freddie Mac are still government entities, and we should have a conversation about that on another show. But these are loans insured by the Federal Housing Administration, and it is called mortgage insurance premium. It's the same as PMI. The government likes to be different, you know. And they have lowered the mortgage insurance premiums by 30 basis points from 0.85% to 0.55%. And so to give you an idea of how that works, if you had a $100,000 loan and you were paying 0.85% for your mortgage insurance premium, that would be $850 a year. If you were paying 0.55% for your mortgage insurance premium, it'd be $550 a year. So you can see there how that would be a savings of $300. The HUD secretary said, "Today we are building on the steps we've taken to make homeownership more affordable, and the Department of Housing and Urban Development is acting to ensure people feel as comfortable purchasing a home now as they did in the past, as they build toward the future. As we reduce housing costs for people with FHA mortgages, we continue to work to address long-standing disparities in homeownership. FHA loans are a little more flexible in terms of debt-to-income ratio. They're a little more flexible in terms of credit score. They are something that's sponsored by the U.S. government because the U.S. government insures them. So they do want to promote home ownership. FHA loans are primarily used by first-time home buyers. More than 80% of FHA loans are to first-time home buyers, and certainly many of those buyers have really been struggling in the ridiculous state of the market for the last couple of years. I think this is very significant, and let's talk about what that means. For someone with a $200,000 mortgage, you'll save $600 a year. For someone with a $300,000 mortgage, you'll save $900. For someone with a $400,000 mortgage, you'll save $1,200. For someone with a $500,000 mortgage, you'll save $1,500. One of the things I'd like to caution you all about is that mortgage insurance premiums on FHA loans never go away. If you bought a home and you got a conventional loan through Fannie Mae or Freddie Mac, and you wouldn't get it through them, you'd get it from Bank of America or Wells Fargo or many other local mortgage companies, then as soon as you have 20% equity in the home, or within a certain time period, the private mortgage insurance payments would go away. With an FHA loan, those mortgage insurance premium payments last for the life of the loan. So if you had a $120 a month mortgage insurance premium payment, you'd pay that $120 a month all the way through the life of the loan, which means, at some point when you can refinance to save some money, you probably would want to do that.